Welcome, everybody. Joining us on the Zoom call. Welcome. Welcome. Joining us on the Talk. Welcome. Wherever you are in the world, welcome. Monday to you. Monday, October 7th. Excited to be here with you. This is the last quarter of the year. Let me turn this. I got to smile. Let's go. Like I said, guys, welcome. Happy Monday to you. It is the last quarter of the year. First call of the last quarter of the year. And guys, if you're in this conversation with me, congratulations for being in this conversation with me, because you are going to gain some things tonight. You're going to gain some things tonight on this call. Even if you're watching the recording here, you're going to gain quite a few things in this call to make sure that at the end of this year, 2024, you have a shot to position yourselves to win when it comes to keeping your hard-earned money in your pocket. I love this conversation that we're in. It's called, how to pay zero taxes, right? As well, what does it look like to pay zero taxes? And before we get into that conversation, everyone, first things first. Come on, let's go. So this company is By the Books Consulting. This company is hosting it. I am Cheston Bulgin, CFO and tax strategist, your accounting superhero, also the founder of By the Books Consulting. And you can reach us online at youraccountingsuperhero.com, youraccountingsuperhero.com. You can reach me via email at cbulgin@youraccountingsuperhero.com, or you can reach me at cheston@youraccountingsuperhero.com. This call is dedicated to you in how we are able to add value to people like you, and what you do is in the accounting, the tax strategy, the tax planning, definitely QuickBooks, and the technology that you use to manage your business financials, but not just manage your business financials, but how to create systems in your business overall, especially in the trucking industry. We do that for you. That's what we're here for. I love these conversations because it could be the one thing that allows you and I to transform and change the trajectory of where it is that we're headed overall in business. It could take off to a whole new level based on one thing. And tonight, I believe that's going to be one of those conversations where you can get one thing that changes everything inside of what you're up to in your trucking company. So if you're not a part of this group already, the Truck Profit Academy, you can go to truckprofitacademy.com. And now until the end of the year, it's free. We did switch up our location, so there's going to be activity in the new platform. We had some of the members transition, like a few members transitioned over to the new platform. We want you to take advantage of being with us throughout the Truck Profit Academy, because there are a few things that are coming down the pipe. Number one, the real thing is Mastermind. I was having a conversation earlier today about running a trucking company and how lonely it can be. If you're an owner-operator, it can be like you're on your own with things, trying to figure things out. And you're going down a certain path, thinking about, okay, what can I do to actually create what I want in this business? And it's like you're just on your own with it a lot. And there are other people, we know this in the back of our mind, that there are other people that have accomplished some things in this industry that you want to accomplish. And it'd be a great benefit if you're around those people so that you can fast track your outcomes in your business. And that's what we're looking to do. We're looking to create this mastermind. So keep an eye out in the Truck Profit Academy. We're actually building out surveys to see what we can deliver in this mastermind for you. I have a really good idea. I've gone through some things in trucking myself, and I really do get what you go through in trucking. And, there are people that have seen their way to the other side. That's why we do what we do. We've actually been able to navigate through to another side of things where there is peace, there is ease, there is clarity in business in this area, and you can achieve the outcomes that you want. You don't have to waste time. So that's the idea behind the mastermind that's coming up this quarter. Super excited about that, guys. There's other things, we still are completing on our series, Truck Profit Accelerator series, to make sure that you have the keys to win with those principles too. And there's interviews with experts that we're bringing on. So guys, if you're not a part of this community, you want to be a part of this community to take advantage of all the things that we're delivering here, okay? And you can be in that community by going to truckprofitacademy.com and getting signed up on our new platform. Also, if you haven't taken advantage of this, you want to take advantage of this while still around as well. You want to stop wasting time and increase profits and cash flow as soon as today. That's what we're about. So you can do that by hopping on a call with me personally or somebody on our team to look at your situation. You have an outside pair of eyes that can look at it and say, okay, well, you've been doing things this way, fantastic, and you've been missing this. You just need to put this in, and now you just win easy. Okay, so you get on that call, and you can actually stop wasting time and increase your profits and cash flow as soon as today. You can do that by going to youraccountingsuperhero.com/book-and-appointment. Let's get started with this, guys. Quick disclaimer. The following is for educational purposes only and is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, and/or legal professional for specific advice. All right, today we're talking about how to keep your hard-earned money through tax strategy. What would it look like if you didn't have to pay taxes, on the money that you made? Now, there's always going to be a situation if you make money, the IRS, and the state agencies, they're going to want to have their cut out of what you make, and there are those rules to the game where you can actually keep your money in your pocket by understanding what strategies you want to put in place. You can manage your cash flow in a way where you can still keep money in and use that money, deploy that money in certain areas in which you want to deploy that money. All right, so we're going to talk about some fundamentals today to help you achieve that. It all comes down to strategy, then execution of the strategy. And then when there's that execution of the strategy, the destination is success, a winning formula. So let's go. All right, so you don't have to deal with tax burdens all the time. So this can be a stressful topic for a lot of entrepreneurs, especially those of you who are in the trucking industry. Why? Because there's so many other things that you deal with. Okay, let's talk about that. There are so many other things that you deal with in the industry. Well, why would you want to add this to the equation as well? Let me just take this away so it's not confusing. Why would you want to add this to the equation and on top of what you're already dealing with, right? Really, you don't. But sometimes it's a matter of just not knowing where to begin. And that overwhelm comes into place when we don't really know where to begin. We don't understand the rules of the game. We don't have the first action to take. We don't have that first step to make. And because of it, it could be a resigned position that you have. There could be some resignation about where you are in the business. All right, so hopefully that makes sense because some of you guys are dealing with that in terms of the overwhelm, the stress. You just don't want to deal with this all around. You actually just want to be able to go out here and do what you do, make your money, keep your money, and be prosperous. You deserve it. I have it that way. You really do deserve it. If you're out here doing what you do in the trucking industry, you deserve to keep the money that you make and actually put that money to where you want to put that toward in life. That could be, financial freedom for you and your family, your heirs, legacy, all that is possible. Freedom, wealth, and legacy. Okay. So if you don't have an understanding of the rules of the game and you haven't taken the opportunity to implement these rules of the game, then you're going to be missing out. You're going to be overpaying. And I see it time after time after time again. And I hear it. I hear the pain of people. I was speaking with somebody recently. They came to us and I had a conversation with them and I looked at their financials once we got them all cleaned up and everything. I was like, man, why didn't they position themselves? Right. And we're looking at stuff from last year. By the way, planning for taxes happens before December 31st, planning and execution. For the most part, there's not much you can do after December 31st of that year. So if December 31st of that year has come and gone, there is little that you can do, all right, to make that difference when it comes to what it is that you owe tax-wise, which is why it is important to have a strategy from January 1st all the way through to December 31st, and not just have a strategy in place, but also have the plan of execution with that strategy. So if you don't do that and you waste the time throughout the year because you're just caught up in the day-to-day operations, that's your reasoning behind it. Your reasoning is that you're caught up in the day-to-day operations. So if that's you and you're just doing that, you're caught up in the day-to-day operations, you're not really planning, like strategizing, come up with strategy, and then game planning on how you're going to execute that strategy. Well, you got nobody to blame but yourself, bruh. All right. You want to be able to do that. Now we have professionals, I'm a professional, so I help people with this. Okay. Now we have professionals that you can lean on for this. And it's not their responsibility. It is yours. It is your responsibility to have ownership over this area of your life as such that, you win, become come January, from January 1st to December 31st. Hopefully that makes sense. All right. So what does that look like? Okay. What I want to do here today is give you something where you can actually have like a real good solid foundation, a way of thinking when it comes to this, so that one, you reduce the overwhelm and stress around this because you have a blueprint fundamentally that you understand in terms of how you're going to approach taxes from January 1st all the way through to December 31st in any given tax year. Now that could be it also applies to whether or not you have a fiscal year that starts at another date and ends at another date. What I'm really talking about is that you want to navigate that between, first day of your year until the last day of your year. So you take all the actions, you execute on all the actions that you have strategized on to reduce your tax liability to near zero. Okay. Hopefully what I'm saying is landing, it makes sense. And, when we do this, guys, really, when we do this, there is, an alleviation inside of life because you know that you've mastered something. Especially in this area where you have mastered in a way where you don't have to, come out of pocket come April 15th in the way that you've been coming out of pocket because you haven't planned this way, you haven't strategized this way, you haven't executed this way. Okay. So let me share something with you. I want to give you some fundamentals, a blueprint here to work with. And tell me, guys, because sometimes I think things are real simple when I put them out here, and then other people are like, man, Cheston, that's pretty complex what you just shared. Okay. So the goal here, guys, is to make sure that we deliver things in the simplest way possible so that you can go out here and execute, at least give you a direction on where to go for yourself. Okay. So if there's any questions that you have, you can put them in here in the chat. You can deliver them if you're watching here from YouTube. I might not get to that comment now, but I will get to that comment at some point in time to give you some more clarity and some more direction inside of that. If you're in the Truck Profit Academy, same thing. You can always forward that conversation in the channel, especially in that live stream channel where we have that communication specifically designed for these live streams. You can ask those questions there. Okay. Pull this up, guys. Where did they go? Here we go. Okay. Now you guys should see a little diagram here, like right next to me. I know you can see it's right here. So I'm gonna make this a little bigger so that we can see it. And I'm gonna bring this up pretty large screen here just to talk about it. But before I do that, guys, what you're gonna see here, there's actually a couple of things that we want to consider when we're looking at tax strategy. Number one, I did put on like the trust here to make sure that ownership is really flowing through the trust. That's really more so for asset protection purposes than anything else. So there's going to be a trust here inside of this diagram. And we're going to talk about those things at another time. But because it's here and because it looks like this, I want to address it, that there is a trust here that's set up that has ownership of all of your assets, all of your businesses and everything else. Okay. Now, with that being said, there's a side of this where we want to manage something that we call earned income. So what do I mean? There are ways that we bring in income. Really, there are two separate ways. Fundamentally, there are two separate ways that you and I can have income. We can either go out and trade our time and perform services, and we get paid in return for that. So I'm going out here, like, for example, like in my business right now, this business particularly that I have in By the Books Consulting, we'll go out here and we'll meet with people and we'll talk about, how they can improve the performance of their business, how they can do things like this, save on taxes. We'll file taxes for them. We'll make sure that their financials are in order. We'll make sure that they have an understanding of what those financials mean so they can make sound decisions. So we're doing all this. We're trading all these services for revenue, for income, okay? So at the end of the day, it's earned. We earn that income. All right. Now, it could be you trading time for dollars. Could be you picking up loads and dropping off loads, but you're going out here every day and you're actually providing a service or you're selling a product. All right. But that's how we earn income. It takes your physical effort, your presence to earn this. Okay. Now there's another side. And hopefully that makes sense. Earn income, trade, right? Trade of your services, trade of your time. And that's how you earn income. All right. And that's what we call it, earned income. And there's another side to this. It's called passive income. Okay. Passive income is fantastic. Earned income is pretty good, but passive income is fantastic. Okay. Passive income, it means that this is money that I make and I don't trade my time. I don't perform any services, but money comes in regardless. For example, interest, right? You can earn interest income from, let's say we actually buy bonds, like tax-free bonds, really. Like we can buy municipal bonds. This is another tax strategy, right? We can have municipal bonds that we purchase that don't have any taxable or tax associated with them. It's tax-free. A lot of those bonds are like that. They give you tax-free interest. Well, I'm not going out there and trading my time to get this money. No. I said I would actually buy this bond, and in return for me buying this bond, I want to get the interest income on that bond, and they pay me for it. Okay. Whether I decide to get out of bed in the morning or not, it's still coming in. Passive income. Real estate portfolios are passive income. Real estate. We have rental income. Well, the rental income's coming in. I'm not necessarily going out there and doing anything to produce his income on a day-to-day basis. No, it's coming in regardless. Okay. Now, there's other forms of passive income. There's investment income, stocks and everything. You can get income from that. You can have an ownership interest in a business where you've invested money into a business, and now that's interest or passive income coming in from you. Dividends, right? If you own a company, and especially in the stock market, and they like to pay what they call dividends, which is periodically they give you a payout of the share of the profits, and you didn't do anything, that whole year, you're still getting paid money. Well, that's passive income. So we have that type of income, passive income, and we have the former type of income, which is earned income, which I got to trade my time. Now, I'm going to pose a question to you. Which type of income would you like to have? I guarantee you like to have the money where you make money while you sleep. Right? That's most likely the case. When some people are like, man, how can I do that? How can I do that? Well, that's what we're going to talk about a little bit, not necessarily how to do it, but we want to understand the income structures and how they're taxed so that you can set yourself up to win. Okay. And inside this conversation, with this diagram here that I'm about to go over, you can see how you want to set it up. So you have a side of this where you actually have earned income that you get to manage, and then you have passive income that you get to manage tax-wise. Okay. Let's talk about that a little bit, guys. Now, if you have any questions, again, I definitely want you to put those questions in our chat. All right. Put those questions in our chat if you have them. Okay. So let's get into this now. Okay, we're gonna actually get into this right now. All right, so we have this diagram here, and at the top of this is you. Okay. At the top of this, here is you. It's gonna point to you. Okay. Now we talked about the trust here. Typically, you have a trust, and the trust owns the stuff. You don't really own the stuff. The trust owns the stuff. When I say the stuff, it means your trust is going to own your assets. The trust is going to own your businesses. So you really own nothing. Well, this is really an asset protection feature that you want to put in place. We can talk about that in another conversation. That's going to be an exciting conversation in trucking because you want to protect your assets in trucking. You want to cover your assets in trucking. Okay, that's what we want to do. And this is one of the ways to do it is to have this trust. Okay. And there are two sides. We talked about the two sides that are represented here. One side is the earned income side, and the other side is the passive income side. We can see that clearly over here and over here. Okay. So this is the ownership. And down the middle here, we have something called a foundation or charity that would also be owned. Okay. We want to have these components. everybody by nature has the basic two components, like we have earned income. Sometimes most people have earned income, I'll say. Some people don't have passive income. You want to have understanding of what income structures you're building for tax purposes. Because why? With earned income, we deal with an additional tax called FICA. Okay, FICA. Let's actually put that here. Earned income is one of the big things. FICA tax with earned income. So what is FICA tax? Well, this is Social Security and Medicare. It's a 15.3% tax that is expected for those programs that each and every one of these citizens pays into. Whether we get it or not when we retire is a different story, but we get to pay into it if we're doing earned income. That's the requirement. All right, that's what it is. So we pay this through a W-2 wage. And we pay this if we don't have a W-2, but we own a business. Well, you pay it through your business net income. Now, the thing about self-employment tax is what they also call this, FICA, also known as self-employment tax. Let me actually put that here. SE tax. All right, other name for the culprit, self-employment tax. Now, the thing is, if you work for somebody and you get a check, well, you pay half of that from your paycheck. You'll see that Social Security, Medicare, and you'll pay half of that. It's really 7.6% between the two, 7.65% between the two. Now, the employer, the person who issues that paycheck, pays the other half of that. Okay, so 7.65% from the employee, 7.65% from the employer. And we call it self-employment tax because if you own the business, if you are employed by yourself, well, then you have the privilege and the benefit of paying both of those, right? Which is 15.3% for self-employment tax. Okay, that's how that works. Now, this is only subjected to earned income. Earned income is only subject to this. This is why it's important to understand the two dynamics of how you bring in income, because on this side, we want to get present to how we manage self-employment tax as a business owner, as a owner of a trucking company. Okay, so if you were not aware of this, it's super important that we have this understanding fundamentally, because now we get to go to work on how we manage our exposure to self-employment tax, which is that FICA tax that you would have to pay on both sides because you are the business owner. Hopefully that makes sense. All right, so what I have here down here says we want to manage our exposure to earned income, because the more earned income you make, the more that you have to pay into FICA, self-employment tax, which is an additional 15.3%. Okay, now there's a limit on this. I think it's 168,900 for 2024. Okay, that's what that is. 168,000. I think it's 168.9. Let me just double check my number there, just to be sure. Okay, 2024. This number actually changes from year to year. All right. Max Social Security for this year in 2024. It's 168,600, not 168,900. Okay. So what that means basically is that up until that, like it's a 12 point. I'm sorry, it's a 12.4% tax by comparison of that 15.3. So that's the portion, 12.4% up until that $168,600. Okay, so get this, guys. We want to understand what that is in terms of impact. All right, so if you're paying, I've had people. All right, this is it. Right? I've had people. One of the benefits of working with us is we actually structured you in a way where you're not overexposed to these taxes. But if you don't behave in a way that honors what we put together, like the structures we put together, then it's like a waste. So we had a company that we switched over to an S corp. Man, the main thing about S corp, and this is one of those structures, guys, for tax strategies. S corp, when you're making money, you want to have that, okay? Because now you have a limit on your earned income. which is exposed to self-employment tax. Fantastic structure because it's comprised of both passive income and earned income. Okay, but we get to manage it. That when I say manage it, we get to manage the earned income from an S corp. So we switch the company over to an S corp. Okay, and we switch that company over to an S corp for the reason I just stated, was to make sure they're not overexposed to the self-employment tax. Right, and the company's generating, this trucking company is generating millions and millions, like tens of millions, really, multiple times, tens of millions of dollars a year. Okay, so you can imagine how much savings that they would have by not having, that whole amount. Get this, if you're a business owner without that structure, all of your profits are subject to self-employment tax, right? At least from a standpoint of the first 168,600 subject to the lion's share, that Social Security tax is what that is. Okay. Now, if you pay yourself a wage, which is required in an S corp, that's the only thing that's really subject to that self-employment tax for the earned income. And the rest of the income is not. It doesn't have that 15.3%. So if I actually structure my business in an S corp, I am required to have a reasonable wage. Okay, I'm required to have a reasonable wage. So get this, Warren Buffett, for years, has only taken a salary of $100,000. Get that, right? Warren Buffett, one of the richest people in the world, $100,000 salary. Why? And because of one of the main reasons I see is because of this thing, is that, well, if I'm going to have a salary, a wage, why would I want to put that earned income there for me to get exposed to that additional 15.3% to a large degree? I'd want to not do that to myself. Okay, so this company that we switched over, they paid themselves, the two partners, right? Two shareholders are now on the S corp. They paid themselves, what was it, like $1.2 million between them in wages, W-2 wages? Completely defeats the purpose. All right, completely defeats the purpose of having an S corp, to reduce your exposure to this. Okay, think about this. If I can not have that 15.3%, or if I can minimize that 15.3% to as little as possible strategically, that's what I want to do. So if I have a role in my company, and the role is like, maybe I'm a manager or something like that. Well, if I'm in this region, the company's generating, tens of millions of dollars, I can look and say, well, managers actually only make about $70,000 in that area. So why would I pay myself any more than that? Because what happens is that earned income just goes up. And if I have that earned income, like we're saying here, I'm going to end up paying an additional 15.3% as the owner of that company that provides my wage. Get that? Now, if you can reduce that to whatever is reasonable, well, you can reduce that a whole lot in terms of taxes. At the end of the day, that company ended up paying an extra like $45,000+ just in that one area, right? Just from not taking advantage of that. But why would you do that to yourself? Why would you give yourself a bill of that amount, knowing that you've actually strategically gone and put yourself in a position to not do that, right? So this is what I want you to get out of this conversation. There are things that you can do. And you'll hear it on the internet as well. Like you'll see people talking about, man, this tax strategy, that, you can pay zero taxes. And they'll give you like all these techniques and strategies, and they say, here you go. And then you go out there and you left your own devices, you're not really executing on these things very well, and you don't benefit from the strategies that are being told to you or given to you. So what do you want? You want to really understand how to implement this throughout the year. Understand, yeah, we have the strategy like this, and we're talking about earned income, how to reduce earned income exposure so that we don't have that complete exposure to the self-employment tax, right? But, well, how are you going to execute on that throughout the year? What are you going to do day by day to ensure that you are optimizing the strategy, you're executing on the strategy? Okay, that's just one, right? Earned income. So ideally here, guys, in this side of the equation, I'm going to bring this back up. Ideally, on this side of the equation, the earned income side of the equation, we want to reduce our exposure to this as much as possible. We want to keep that earned income down to the minimum. Okay, we can do that with an S corp structure. by minimizing the amount of profits that are subject to what we call the self-employment tax, which is subject to the earned income. S corps are good because they convert the profits to passive income, and they're not subject to this. Okay, they're only subject to what we call ordinary income. Right. So that's number one. Understand the structure and the strategy there for switching to a structure like a business structure that does not expose you to self-employment tax. Right. Eventually, there are other things that you can do, guys. We're not going to get into too many details in terms of like the C corps. C corps could actually work to a degree because the corporate tax rate is lower, and you don't have to necessarily give yourself a wage. You can just give dividends for it, like passive income through the corporation and the C corp. You can work it that way. Not typical for a small business owner, right? Because it's a little bit complicated to do it that way. But there are things that you can do. Is my point that you can do to make sure you are not overly exposed to earned income, which exposes you to this self-employment tax of an additional 15.3%. Okay. All right. So in the other one is, part of that. So we talked about Social Security, that 12.4%, and then we have the Medicare portion of that as well. Okay, which makes up the difference. Okay, and that's unlimited amount of income that you're actually bringing in. That's on all income that's profitable, all profits of the business, if you don't have a structure to minimize your exposure there. Okay. Now, we need both of these incomes, guys, in the beginning. And the idea here is to make sure we reduce, this is your fundamental understanding of it, reduce your earned income exposure, number one. Move things to your passive income, all right, number two. And all the other income, like we want to start looking at, well, how can we funnel it to, we call it deferred taxes, deferred tax strategy, and tax-free strategies, okay? Like tax-free growth. So it's not tax-free like pay tax now, but have tax-free growth on the instruments that you're using inside of the invested tools that we use in business, okay? So the idea here is actually to convert as much earned income to passive income, and then we want to convert all income into deferred taxes, which means, well, what kind of strategies can I put together to make sure I don't have to pay taxes on that money this year? That could be things like retirement contributions. Very, very great strategy to do that. That could be maximizing deductions that you never had no idea that you could take. All right, there's so many other deductions that people don't take, especially in trucking, when there's a possibility of reducing their taxable income altogether. That's not just deferred, but that just makes it so it's tax-free, right? And then if it is tax deferred, how are you maximizing those vehicles in terms of what are you investing it in? How are you investing the difference? Now, there are also tax-free growth vehicles like Roth accounts in which you can grow money in those accounts tax-free with some of these same passive structures, passive vehicles that we use, whether that's in real estate, whether that's investing in other businesses, and they grow. Right? Maybe you want to diversify into ownership of other trucking companies as a silent partner through maybe a Roth account, which you could do in a self-directed vehicle, right? As long as you're at arm's length of the transaction, right? You're not actively involved in that company. You could do that. You can have more ownership in the industry by owning another trucking company, just be an investor, a silent investor. And if that company has great growth potential, right, and they actually do well, you may have the ear of the business owner to give them some. And when you start running your own company, well, you may have the ear of the business owner to give them tips and strategies so that they can actually win at a high degree of probability, high probability of success, where that company grows to a company that does multiple millions of dollars. And your money grows tax-free, right? And like those are possibilities well in hand for you so that you don't have to pay taxes on your money, right? You start building what we call an empire, wealth, of wealth and legacy through this. And then there's the other funneling point in terms of down at the bottom here, we have our foundation or charities that we can actually start and own. Now get this, what if you have a passion? Then you want to contribute. And then we want to use that passion into one of these vehicles like a foundation, create a foundation, and it could be funded by your other your other income. Like we can convert that earned income into charitable contributions, and that's deductible, right? And now once we do that, that foundation still has the money that you can use today to forward the things that are inside that foundation, which could really be things that line up with what you're doing in life anyway, right? You have control over those funds to do those things. Like, man, you can do an event, like a charitable, like a fundraising event to your charity, and you could host that fundraising event in Bali or someplace, right? And you could get a nice trip from the foundation to Bali to do a charity event where people contribute to that. And now those are funds that you actually have access to do those things, right? And you don't pay taxes on it because you've actually contributed to your foundation, okay? Now, these are some really good things to think about in terms of being able to legally reduce your taxes to near zero. We talked about the surface level stuff here, guys. There are so many things, right? We just scratched the surface of a few. And what I want to leave you with in this conversation is the fundamental understanding of what type of income am I dealing with that I get to manage, right? What fundamental income am I dealing with that I get to manage for my business and my life? Well, right now we have the understanding of two fundamentals: earned income and passive income. These are the two types of income structures that any human being in this country that deals with taxes has to manage. Now, if you understand both of those, then there are compartmentalizations of how I manage the earned income side. And then there's the other compartmentalization of how I manage the passive income side of the equation. And once we compartmentalize it like that, then there's, we can manage it and we take those actions and have those strategies in place to move life forward when it comes to keeping your hard-earned money in your pocket. Okay. Hopefully that makes sense. Hopefully this was of value, guys. If you have any questions about this, feel free to leave those questions in the chat, in the comments and everything. You can leave them here in our Zoom call. You can leave them on YouTube. If you're chiming in from YouTube, definitely leave them in the Truck Profit Academy if you're inside the Truck Profit Academy for yourself. And guys, the idea here is that you can keep more money in your pocket, increase your cash flow, increase your profitability, and know how to keep it when you're making it. Okay, so that you have that peace, that ease, that clarity about your business, and you actually know what to do and how to do it, and you have confidence, and you're moving it forward every single day. You don't have to worry about anything because you know that you have the strategies in place, ironclad, and there's clarity and confidence in how you do it. Okay, I want to leave you with that today, guys. It's been a pleasure being with you tonight. Go out here and crush it. Understand the basics here because we're just getting started with this conversation. I gave you the basics here, okay? And then we're going to go dive in over this next quarter. We're going to dive into this conversation where we talk about tax exposure, how we actually manage this, what kind of strategies do you have specifically that you can deploy in life, right? And I just want to leave you with this. I gave you a few things today, all right? But the basics I want to leave you with is the type of income structures that we get to manage. That self-employment tax is a big deal. You may not have even known that for yourself about how self-employment tax is impacting you on the earned income side. And now you do. Okay, you do. You understand that now, but not just understand it. How are you going to use this in your life today? How are you going to use it in your life tomorrow? I want you to go out here and crush it. I want you to actually create the strategies and work with your tax professional, work with your CPA if you have one, and ask these questions like, how do I actually do this? I have earned income. I want to reduce my exposure to earned income. How come you haven't brought this to me yet? Right? And now you can go ahead and make sure you move this forward and crush it at the end of the day. All right, guys, great being with you. Have a great rest of your Monday evening. Talk to you next week. See you soon. Take care, guys.